What's going on, guys? Welcome to Liberate Your Money, episode 23. It's May 24th, 2020. Gonna talk about a podcast I want you guys to check out, and then I'm just gonna do a deep dive into the technical analysis side of Bitcoin on the Bitcoin chart. We're gonna look at a bunch of different time periods, and we're going to just kind of dissect on some possible levels. As you can see, since the coronavirus dip over here, we have been trending along this line right here, and it's been basically since the middle of March. It's been holding strong. Price has been bouncing off of it in this uptrend. And it wasn't until actually today that we broke below this line. And this morning I made this post. I'm preparing for the 7Ks for Bitcoin. And I'm going to get into why I think that. But first, I think you guys should hop over to Anthony Pompliano's podcast and check out one of his newest episodes with Travis Kling. Asset investor, digital asset investor, used to trade traditional markets, and now he branched off and started his own digital asset firm where he strictly deals with crypto and Bitcoin in general. And it's just he's a younger investor. He's got a better outlook on the future of digital currencies, in my opinion. You can take a bunch of boomers and the older generation's opinion on it, but the reality is those guys don't have to understand Bitcoin. They're already heavily entrenched in traditional markets, in the traditional way of doing things, and they're on the back half of their lives, so that they really don't, there's no need for them to be heavily involved or to see a future in this in these markets, in cryptocurrency. So I think it's best to hear the point of view of the younger generations, your millennials and below, because these are the people that are going to be using this technology. These are the future leaders of the world. These are their opinions are more valid, in my opinion. I mean, these are smart people. Just because they don't have the wisdom of the 60 to 70 year olds doesn't mean. But on the back end, they have the technological point of view. We grew up with the internet, so we understand how things evolve, and we understand how this type of technology can take over, especially since the tech boom from the mid-90s to now. I mean, we just see how the internet has exploded, and there's really no reason that Bitcoin and crypto can't take off or won't take off. And I think Travis, he's been on the podcast before. I'm a big fan of Travis's, so I know I've promoted his work before, but this podcast is great. He just gives his perspective, and I just think it's a really good podcast you guys should check out. So heading over to the Bitcoin chart, we're going to look at the yearly chart. And this is the Coinbase chart, and Coinbase only has data back to late 2014. So there's a limited amount of data. Bitcoin's been going since late 2008, early 2009, but the Coinbase chart only shows data from like 2014. It's not very important, since this is basically the most important data anyways, the most recent. So if we look at this chart, each one of these candles represents a year of price action, right? So this was the 2017 bull run, and it got all the way up to damn near 20,000, basically kissed 20,000, corrected, and then the year closed at about, let's call it 14K, 13.9. Then we had the year 2018, which was the bear market. Brutal year. I mean, I got involved in crypto, mid 2017, in the middle of the bull market. I made some money, bought a bunch of altcoins. Early 2018, thinking I was going to make a bunch of money, and I did make money, but then I ended up losing a bunch of money too, just because I was new to the space. I thought this stuff was just going to go up forever, and that's clearly not the case. now that I'm more familiar with Bitcoin's 4-year cycle and, you know, how volatile price is with it, you know, I've got a better understanding and better risk management since then, thankfully. And hopefully you guys can get some wisdom out of this as well. So yeah, this is 2018 correction, and we saw it correct all the way down to 3,000, just above 3,000. And 2018 closed at like that 3,600 level, and then that's when we started to see Bitcoin steadily rise in price, and shot up and had that 2019 pump all the way up to, what was it, 13. Basically came up and tested this top of the yearly closing. See, it just shows you how important macro levels are. If you zoom out, you know, look at the yearly, look at the 6-month chart, look at the 3-month chart, look at the monthly chart, look at the weekly chart. Like, these levels are hella important. I mean, you know, if you're looking at price every day, you know, the intraday price action isn't nearly as important as like the yearly closes and stuff like that, because humans like to put things in boxes. We like to, you know, we see a data point like this and we react off of it, and that's basically how trading works. You know, it becomes a self-fulfilling prophecy based off of history. And once we bottomed in 2018, 2019 we shot up and tested that yearly close high, and then we corrected back down, and at the beginning of 2020 we started the rise again. We started the rise back up to, what was it, 10.7 or whatever. Then the coronavirus hit, and then we fell down and we nearly tested the bottom of this yearly close, yearly open for 2019, and we shot back up to where we're at now. So an important level right now would be this yearly open for 2020, which would be, it'd be that 71.65. So that's an important level for me. 71.65. I've got it. I'm keeping cash on hand. I think it's very possible that we go and retest that level, based off of current price action and based off of us breaking that trend that I was telling you about, breaking this trend line. I think it's very possible that we come back down and test the yearly open right around the tops of this level that took us a while to break above. I think we might come back down and retest it, which is right around that 71.65, 7,200 level. And maybe we don't get that low. Maybe we hit this monthly level right here, which I'm going to get into. So this is the yearly chart. We've dissected the yearly chart. We've got our yearly level that we're going to watch, 71.65. All right, let's zoom in on the 6-month chart. Now, if we look at the 6-month chart, we can see that 10.7 level was the same as our yearly level, that yearly high level that we closed at. And then we can see the beginning of the year, that 71.65 levels right here. I think there's a high chance that we come back down and retest that level, just based on the 6-month chart, which these levels hold more weight, meaning that if price gets down to that level, I have more confidence in the price bouncing at the 71.65 level than I would have confidence at price bouncing at this 8,600 level, which was the monthly open for May. You see what I'm saying? Like, the further we zoom out on the chart, you know, these levels are more important than if you zoom in the monthly levels. Like, I'm not saying monthly levels aren't important. I'm just saying that the 6-month levels and the yearly levels are going to hold more weight than a monthly or weekly level. Price is more likely to react. At least that's how I view things. In the past, as I've become more familiar with trading and investing, those are the levels I'm really looking at, the macro levels, this monthly, 6-month, yearly charts. And you see a lot of traders do that. You know, they'll be bullish one minute, and then, you know, we break a parabola or like a trend line like this, and then all of a sudden they throw out this number 71.50, and you're like, how the hell did you get that number? Like, You know, I'm pulling on my fib and it's not even on there. Like, what's going on? Look at your monthly, look at your 6 month, look at your yearly chart. I guarantee you one of those levels is going to be the level that that trader is talking about. That's just a tip for you guys. Macro levels are more important than the micro levels before it. Doesn't mean that the micro levels aren't important. It's just that the more you zoom out, the more important those levels are, the more likely price is going to react. So now I'm going to, now that we're on the monthly chart, I'm gonna hide my drawings here, and it's gonna look like a mess. I know. I'm gonna get rid of this for the retracement because it's not really, I don't need it right now. So this level 2 and this one. So these are monthly levels that I have mapped out from these levels over to the left. From the 2018 bear market, you can see these major levels right here and right here, and you can actually see how prices reacted to those after the fact. Like, this is the price history that this price was reacting off of. You know, if these levels weren't here, you know, I doubt that, you know, we would have closed down here. You know what I'm saying? So I have these levels mapped out. And since, now I'm going to zoom in. These are monthly levels that I have drawn on the chart, right? So now I'm going to zoom in even farther. This is the weekly chart. Each price is the equivalent to a week's worth of price action, each candle. And you can see how price reacted to these monthly levels. We never made it to the top of this monthly level up here. We got shut down by these levels right up here. I had it marked red because it was a level that we just hadn't broken yet. And we never did break it. I thought we were going to, and we didn't. My last video, price was looking very bullish. We were flag patterning. It was right at this 9.8, and then honestly we corrected from then. I'm going to zoom in on the daily so you can see. Excuse me. So yeah, my last video I did, it was right up here, and I made a stupid statement. I said I don't think we're going to get a major correction anytime soon, and I basically called the top. And we came back down here and tested this monthly level, and came back down, or came back up, which I did see that as a possibility. I had this post that mapped out some correction possibilities. They weren't deep correction possibilities, but they were correction possibilities if we weren't going to break this diagonal that we just broke. And what ended up happening is the green played out. I said green was the correct answer. You can see we came down, tested the monthly level, and then we went up. We couldn't break this top level. We topped out again, and then we corrected back down to this level.
Hey, this is
and we
Amy
actually
Schumer.
broke
Did
through
you
that,
know
and then
that I
we
have
were
a
resting
podcast
on
Spotify? Are you serious? You didn't
this
know
diagonal,
It's called
and
Three
then we
Girls,
just
One
recently
Keith.
broke
I hosted
below
along
that,
with my
and
best
that's
friends
where we're at
Bridget
right
Everett,
now.
Rachel Feinstein, and Keith Robinson.
Here, I'll redraw
I can't
that
believe you're not
diagonal now that
listening
we're
yet.
zoomed in.
Okay, I'm sorry. I'm mad, but I'm mad. Okay, I'm fine now. This season we've got Quentin Tarantino, David Byrne, Ronnie Chang, and the great news is you're in the right app to listen.
So as you can see, we came corrected down. The green scenario was correct, but then we couldn't break the top. We got stopped out on the monthly level up here, and or shut down, and then we came back down here, retested this, and we were hugging this line for a while, and it would have been a great place for long. I wasn't gonna long just because we had this like double top right here. Just, it's not a level I want to be longing after topping here, failing to get up there here, failing again here. It's just not a level I was willing to long, so I was just kind of waiting. And sure enough, we failed to get back above this monthly level here. See, if you were only paying attention to this diagonal, you might have longed at resistance. You can see that we broke this monthly level, came back, and we were fighting that monthly level again. You see how we just couldn't close above it? You know, that's a condition to me that tells me that you're long in resistance, and we're struggling to get above that resistance, so it's not a good opportunity for a long. And look, we ended up getting shut down. And now, if we close below this, like it's looking like we probably will today, it's going to confirm a broken trend line and, you know, maybe a trend shift. So that's why I'm thinking, you know, I'm waiting for the 7Ks for a correction. I think that we're going to, at the very least, going to come back down and test this 85.46 level. If not, this 77.55 level. I think that's another important level that you need to watch. These are both monthly levels that we could potentially bounce from. But my theory is that we just broke this multi-month trend line. I think we're going to get a deeper correction than these 2 monthly levels. That being said, I do have bids at this level right here, actually a little above it in case we get front ran, because I think there's a strong possibility that we bounce in this area, just because of the bullishness. You know, you like to think that you're going to get a good correction out of this trend line break, but you just never know. Like, the halving just happened. I'm expecting us to have positive price appreciation in the next 2 years, so like I'm buying the dip, right? I'm front running the dip. I'm not, you know, I'm not trading like this thing's gonna dip back down the lows. That's stupid to me. Until we break these levels up here, I think there's no reason to believe that we're going to get that low. So these are the reasons why. These are the levels I'm watching on a monthly level basis. Now, I'm going to get rid of my drawings here, and I'm going to do some Ichi Cloud, some extended Ichi Cloud analysis here. Because the Ichi Cloud tells us a lot. I love it. It's another indicator I like to use. You know, a lot of these lines are giving signals for us to trade or to make investments. You know, like when you see this blue line pass over the red line, you know, that signals a bullish trade. You know, you'd enter along right here, and if you would have, you would see that price stayed above the blue line up until recently. And honestly, we haven't closed yet, so it could still hold. You know, this price could get back above the tank in here and continue to trend up. Just because it's down there now doesn't mean that we're going to close down here. We still got, you know, 5-6 hours a day to close. You know, a lot of price action can happen from here till then. But, so, the trend metrics here, the price is above the cloud, price is above the tanking, price is above the Kijun, both of those are above the cloud. So on the daily extended double cloud, everything is bullish. You know, price is below the tanking, that's the first, what would you call it, bearish indicator. But until we close below it, it's not really bearish. So, let's zoom out on the 3-day. The 3-day is telling us when the when the Kijun, which is the red line, which is the median, they call it the median. So oftentimes price will, when it gets away from the median, it tends to want to come back to the median. Wherever, you know, the further you zoom out, the better the tanking the median is. So we're on the 3-day, which is a fairly zoomed out chart. Price is above the cloud. Tanking is above the Kijun, but Tanking and Kijun are below the cloud, and the cloud is still bearish, it's still red. So, although the cloud is holding at support right now, I have reason to believe that price is going to dip down to this 7271 area to the median, or at the very least, test this Tanking. And when you see the median or the Kijun go flat like this for a while, price usually tends to keep dipping towards it, you know, until price goes down here and then the Kijun starts to go back up. Then you start to wonder if maybe price might find a bottom, right? But to me, it looks like we're testing the top of this cloud. I think we're probably going to come down a little lower, maybe, you know, bounce from here a little bit and then come back down into this cloud and then maybe come back down here. And by then maybe the Kijun will have moved up a little bit and, you know, it won't look like 7.2 or 7.1 is the target once time plays out. Maybe it'll be, you know, this 8K 7.9 area, which is another level I'm looking at. So if we zoom out to the weekly, and I know I've talked about this weekly Ichi cloud before. It's been a hella good indicator. I mean, you can just see the cloud and how price reacted to the Tanking and the Kijun. And you can see right now, price is scrunched between the cloud and the median, the Kijun. And as you can see, the Tenkin is below the Kijun, which is bearish. This is a bearish cross. Now, that being said, this dip right here was a coronavirus white swan event. Call it what you will. I don't think it was bearish for Bitcoin. It was more or less a liquidity crisis. It wasn't like, oh, Bitcoin sucks, it's going to zero. It was like, people need money, markets are going in the shitter. You know, everyone was going to cash, so we had to sell off. So I think the fact that this is bearish might be a little misleading because of, you know, the unnatural event that happened, I would say, right? So as long as this Kijun holds, you know, maybe we bounce here. Maybe the 88.5 holds on the weekly chart, and I would not be surprised. I think this is a good place to buy. It's holding right now. But that being said, and also look, the flag looks like it wants to cross bullish, which is another bullish indicator. It's been red for all this time. You know, it's gonna flip here sometime soon. Now, what I would want to see for this to confirm is I want the weekly today. I want this to, if this closes above this red line, the median, the Kijun, I think that's a good sign. I think that means that we're probably going to come up and retest the top of this cloud at that 9.4 area, 9.5 area. And if we close inside the cloud, we've got targets of 11.5, 11K area. So that's kind of what I'm watching. You know, today is Sunday, the week's going to close in a few hours. I'm going to see if this weekly closes above the Kijun, and I think if it does, that's a really good sign. That maybe we won't get the correction that we think we are. You know, I think we're probably going to get a dip lower into that, but I think if you're buying right here, it's not a terrible buy. Like, if you're worried about not getting your allocation, I think it's still a great buy. Now, I zoomed out on the monthly chart, and with the monthly chart, since we don't have enough data on the back end, we don't have a cloud. We don't, because the cloud is based on data points from the past. So if you don't have the sufficient data on the larger charts, the higher time frame charts, then you don't get the data. But what we do have is the Kijun and the Tenkin, the median and the Tenkin. And as you can see, the median, we came up and kissed the median, and it acted as resistance, as it should, as we would expect it to if you're trading this chart. And it's exactly what happened. And the Tenkin is down here at that 85 level, which was that weekly level that we were talking about, which I think is another great area to buy. You know, if the month of May, which closes in another week from now, the month of May closes above this, I think that's a great sign for continuation to at least come back up and retest this Tenkin, or this Kijun, this red line, which is at that 10,000 area, which if we got up there, then I would suspect that the weekly cloud was going to play out and that we would come up and test this 11.5, 11.4 area. So that's kind of what I'm watching right now, guys. I like the price action on the weekly chart. If we can hold this median, close up here above 88, this could just be a healthy correction from the top, you know. So that's what I'm watching, guys. I want the weekly to close above here, and if it does, I'm gonna buy some because, you know, I've got reserves and I've been waiting on a pullback. And I still think we could get this pullback down to the 7Ks. That 7150 is the yearly level. 7165 we talked about. So I think, you know, 7200 is a good level. I might place some bids at. I've got some bids around that 7900 level, and then I think it would be a good idea to put some bids around that 88 level and then that 85 level as well. looking at this bit-stamp chart, I showed you guys this one in the last video, how I broke down each cycle, you know, with the halving involved, and you can see how the cycles are, how price reacts relative to the Bitcoin halvings. And as you can see, I mean, price basically, you know, history hasn't been repeating itself, but it's been rhyming fairly well, right? We have these ranges, price tops out at the ranges, we have a halving, and then we break the range. Price tops out, we range, we top out again, we have a halving, and then we break the range. Price tops out, we create the range with the bottom, price tops out, we have a halving, and then we break the range. So that's what I'm suspecting to happen, but here's an interesting data point that I've been kind of looking at. I've been looking at how long it took us from the top of the cycle, the previous cycle, to breaking out of that range. And you can see it took us roughly 1,064 days. So I was like, okay, so how long has it taken us, or how long has it been since the top from our previous cycle, previous high? And what I found is that it's only been about 900 days. So if we map out 1,065 days, and look, it may not even be that long, but if we map it out, we could be expecting price to break this range a little early. You know, maybe we've got some time to, what I'm saying is that it took us longer to break out of this range than it seems to be relative to the halving for this range. And, you know, I'm under the impression that maybe we're not done accumulating in this range. And look, the first cycle, it took us a fraction of the days to bust out of the range. And I think that's a function of the halving and how the severity of the halving. You know, obviously the severity of the halving gets less and less as time goes on. So I think that, you know, if we think relative to that okay, this cycle is actually, you know, 2 or 3 times longer to break out of the range, what if this cycle is going to be 2 or 3 times longer to break out of this range? You know, maybe we're getting too excited about it breaking out right away, when really we need time to accumulate, and we could accumulate within this range for longer than people are willing to admit we could, you know? And that's kind of what I'm hinting at in this video, is like, look, I'm ultra bullish Bitcoin, given the amount of money we're printing and the amount of just QE and exotic forms of fiat currency fuckery money being pumped into the system. I have to imagine that that's going to work its way into Bitcoin, which is a finite asset that deflates over time. It's going to appreciate the price. But that being said, relative to other halvings, I think we could see an extended period in this range. And I just don't want people to be pissed when this thing corrects to 6 or 7K, maybe even low. What if it corrects to 3K? Are people going to be like, oh, this is over with, Bitcoin, you know, the cycle didn't repeat itself, yada yada yada, when really, like, I mean, we could see, you know, it could be till the end of the year until we see price look like it might want to break out of this range, or longer. So I'm prepared for that. You know, I think a lot of people should too. I'm just talking on what I see on the chart. Obviously the range gets longer as each halving gets less severe. Maybe we're gonna see that. Maybe this range is gonna play out a little longer. I just want you guys to be aware of that. It's always a possibility. History often doesn't repeat itself, but it often rhymes, right? So just because it does that, if we get a correction and this lasts longer, relative to the past halving, I don't think that's irrational of Bitcoin to do that. Just gotta keep the faith, man. If it does that, I'm gonna be ready. I'm gonna be packing my bags like I always have been. That's all I got for today. I'll catch you guys in the next one. Peace.